Hello, Ghost Traders. My name is Angelique with Ghost Trades, and this is your market update for the week of April 6th through April 12th, 2025. So grab your coffee or tea if that's your thing, and let's dive in. It's been a wild ride. Things kicked off with some serious jitters still lingering from President Donald Trump's tariff announcements back on April 2nd, which triggered a pretty steep sell-off. By April 8th, the S&P was down a whopping 12% from its recent highs, and the VIX, our trusty fear gauge, spiked 52. That's about as calm as a toddler on a sugar rush. But then came April 9, and everything flipped faster than you can say 90-day tariff pause. Trump essentially tapped the brakes on new tariffs, and the market breathed a massive sigh of relief. The Dow rocketed up 3,000 points in just one day. No big deal, right? Meanwhile, the Nasdaq soared about 12% during that same session, and by the end of the week, the S&P closed up 5.7%, and the Nasdaq posted an impressive 7.3% gain. All in all, it was like watching a roller coaster that ended on a surprisingly high note. Of course, if you zoom out, we're still in the red year to date, but hey, let's celebrate the wins where we can. You might be thinking, was it only the tariff news driving all this action? Well, that was definitely the headliner, but there were some other juicy storylines too, like earnings season. JP Morgan kicked things off on April 11 with revenue hitting $46.01 billion, beating the $44.11 billion forecast, and an EPS of 4.91, excluding a one-time gain. They're basically printing money with booming equity trading and investment banking fees. Wells Fargo, on the other hand, reported $20.15 billion in revenue, short the $20.75 billion estimate, but still managed an adjusted EPS of 1.33, which toppled consensus. So a miss and a beat rolled into one. Call it a mixed bag if you like. Meanwhile, gold took an advantage of all the tariff drama to shine brightly, hitting around $32.45 per ounce, a decent jump that underlines its continued role as a safe haven asset with those new highs. Silver also joined the party, climbing above $32 an ounce, which is a solid move considering the volatility in other parts of the market. And of course, we also have the world of crypto. Bitcoin fell to the mid 74,000s this week, but ended the week hitting a nice level of resistance just over 86,000. My other favorite, XRP, had a nice bear trap down to a low of $1.61 before it closed the week over $2. So I hope everyone loaded up on that low, not investment advice. But as usual, volatility was high, just how crypto likes it at the moment. So if you're following those candlesticks, it was a real nail biter. Now, on the economic front, consumer price index, that CPI for March, rose 0.2% month over month and 2.4% year over year, suggesting inflation isn't exactly on fire. Producer price index dipped 0.4% month over month, but it was up 2.7% over the past year. Now, initial jobless claims ticked up slightly to 223,000 from 219,000. Still historically low, so the labor market is hanging in there. Where things got interesting, however, was consumer sentiment. The University of Michigan's preliminary April survey dropped to 50.8 from 57.0 in March, while one-year inflation expectations shot up to 6.7%. The highest since 1981, back whenever cassette tapes were all the rage. So consumers might be a little more worried about rising prices than the official data suggests. The Fed's FOMC meeting minutes came out on April 8, but let's face it, they were overshadowed by the tariff roller coaster. Any big insights about policy shifts or rate hikes may end up taking a back seat until the market's done obsessing over trade developments. So what's the big takeaway from this dramatic week? Well, trade policy ruled the roost. The market hated the idea of escalating tariffs, then loved the idea of a pause. We all went along for the ride. Earnings gave us a mixed bag of signals where we had some strong beats, some near misses, and the economic data, on balance, still looks decent, even if consumer sentiment decided to take a nosedive. If you're charting at home, keep an eye on those support and resistance levels. You never know when another policy announcement might jolt those prices again. Now, before I wrap up, I just want to give a huge birthday shout out to my sister Athena. She's an ER nurse who's been working around the clock, saving lives as an RN. Thank you for all you do, sis. I love you. I hope you had the chance to celebrate and enjoy your special day. You have more than earned it. Well, Ghost Traders, just remember, you're learning to forecast the market, not predict it like a Vegas act. This kind of market, wild swings, big headlines, is exactly where all your trading comes into play. This is what traders live for, what keeps our blood pumping, and why we do what we do. Keep joining us in shadow and on the live sessions, and keep doing your homework. Watch those charts. Stay flexible, or as I like to call it, Semper Gumby. Well, this is Angelique signing off, and I will see you all next time for another week of Market Madness and in our live sessions. And until then, happy trading.